Welcome back to Talk Tickers. You know we love to get into the nitty-gritty of earnings calls. And today we're going to be tackling a pretty interesting one.
Definitely interesting.
McGrath RentCorp
Yeah.
for Q4 2024.
Mm-hmm.
Now they're kind of this under-the-radar company
Yeah.
that you might not think about every day.
Right.
But they are basically the ultimate stuff lender for businesses.
Yeah. Think of it as like the ultimate lender of things
Exactly.
that businesses need.
So, maybe back in the day you had those portable classrooms at your
Yeah.
school. Well, that's McGrath.
Absolutely.
Or maybe a company needs some high-tech testing equipment.
Mm-hmm.
That's also McGrath.
They've got it all. Yeah.
They really run the gamut.
Yeah, they do. It's
Yeah.
quite a fascinating business, actually, because it gives you a window into a lot of different sectors of the economy.
A real barometer.
Right. Exactly.
Okay, so let's jump right in.
Yeah.
What were some of the headline numbers?
Well, the big thing that jumped out at me was their revenue growth.
Okay.
For the full year, they saw a 10% increase,
Wow.
and that continued into Q4.
Okay.
So 10% revenue growth for both the quarter and the full year.
That's pretty impressive.
Yeah, especially in this environment.
Absolutely.
Yeah,
Yeah, a lot of companies are really struggling right now.
exactly. So to see that kind of top line growth is definitely a positive sign.
And what about their profitability?
Also looking pretty good. Their adjusted EBITDA for Q4 was up 5%.
Okay, solid, not spectacular.
All right, it's not a blowout number.
Yeah.
But again, given the macro backdrop, I think it's a pretty decent result.
Yeah, definitely something to celebrate in these times.
Yeah, absolutely.
All right, so let's break it down a little bit
Yeah,
by business segment.
let's do it.
They've got a lot going on.
They do.
But the one that really stood out to me was Mobile Modular.
Oh, yeah, their modular building rental business.
Yeah, this seems like it's really firing on all cylinders.
Absolutely. It was a fantastic quarter for them, revenue up 14%.
Wow.
Yeah, they're seeing growth on both the commercial side and the education side.
So both sides of the business are doing well.
Exactly. And what's interesting is on the commercial side, they're seeing wins across a variety of industries.
Oh, like what?
Well, they mentioned data centers,
Okay.
government projects,
Interesting.
even some tech companies.
Tech companies renting modular buildings.
Yeah, it seems like they need space, but maybe they're not ready to commit to a traditional office lease in this environment.
Makes sense. Things are uncertain,
Right, exactly.
so they need that flexibility.
Yeah, I think that's a big part of the appeal of modular buildings.
Interesting.
And then on the education side, even with school budgets being tight, they're still seeing demand for these portable classrooms.
Some modernization projects are still happening.
It seems like they are, which is pretty interesting.
It is interesting.
Yeah.
Okay, so strong growth across the board for mobile modular.
Yeah, and they're not just renting units, they're also selling them.
Oh, right. They've got a new initiative.
Yeah, and it's really gaining traction. Sales revenue was up 32% in Q4.
Wow.
Yeah, that's pretty impressive.
So they're hitting on all fronts.
They are, and their rental margins are also looking good, up to 65% from 63% last year.
Okay, so good growth, good margins.
Mm-hmm.
Is there anything not to like about this business?
Well, their utilization rate did dip a little bit to 75.1%.
Okay.
Now, that's still a pretty healthy level.
Yeah.
But it's down from previous quarters, so it could be a sign that there's some broader economic softness.
Right, especially in the construction sector.
Exactly. If there are fewer construction projects overall, that's going to impact demand for modular buildings.
Makes sense.
Yeah.
But here's something I found really fascinating.
Okay.
They're getting much higher rental rates on their newer units.
Oh, yeah, that's right. The average monthly revenue per unit on rent is about $828.
Yeah.
But for the new units they've shipped out over the past year, it's over $1,200.
That's a huge difference.
It is. It suggests they've got some real pricing power.
Yeah, it seems like they can raise prices without scaring away customers.
Right. And what's interesting is as those older units roll off and are replaced with these newer, pricier ones, that could potentially boost their margins even further down the line.
Okay, so mobile modular, the star performer.
Yeah, the bright spot for sure.
All right, well, let's move on to a segment that's not quite as bright.
Okay.
Portable storage.
Yeah, that one's a little bit more challenging.
Yeah, they saw a 15% decline in revenue this quarter.
Yeah, not great.
Not great at all.
No.
So what's going on there?
Well, they're blaming it on a couple of things.
Yep.
Higher interest rates.
Mm-hmm.
And you guessed it, that slowdown in commercial construction that we were just talking about.
So the same factors that are benefiting mobile modular are hurting portable storage.
It's kind of ironic, isn't it?
Yeah. Very interesting how that works.
Yeah, and this weakness in portable storage seems to be pretty widespread.
Okay.
It's not just isolated to one particular region.
So it's really across the board.
It is. And their utilization rate also took a big hit, down to 61.2% from almost 75% last year.
Ouch.
Yeah, that's a pretty significant drop.
So how are they responding to this challenging environment?
Well, they're doing what they can to manage the situation.
Okay.
They're cutting back on spending for new equipment.
Makes sense.
And they're really focusing on controlling costs.
Yeah, batten down the hatches.
Exactly. It's a classic playbook for riding out a cyclical downturn.
All right, so we've got the good, the mobile modular,
Yeah.
and the not so good, the portable storage.
Right.
Now let's move on to their third major segment, TRS RentCorp.
Yeah, this is the one where they rent and sell high-tech testing equipment.
Right, all sorts of specialized gear that companies use for testing and measurement.
Exactly, and they're feeling the effects of an industry slowdown as well.
Okay.
Overall revenue for the segment was down 3% in Q4.
So even the high-tech stuff isn't immune.
It seems like no one is immune right now.
Right.
But there are some interesting nuances within that segment.
Oh, like what?
Well, while their rental revenue was down 9%,
All right.
their sales revenue actually surged by 26%.
Wow, so it seems like they're pivoting a bit.
Yeah, they're focusing more on selling off their used equipment, which makes sense. If companies aren't renting as much, maybe they'll buy instead.
Makes sense.
So it's a way for them to kind of adapt to the changing market conditions.
Yeah, a little bit of a silver lining there.
Yeah, absolutely. So before the break, we were talking about how McGrath is seeing strength in mobile modular, but some weakness in portable storage.
Right, like the same economic trends are impacting them in totally opposite ways.
Yeah, it really highlights how their business is tied to the broader economy.
Absolutely.
Yeah.
So let's talk a bit more about their outlook for 2025.
Okay.
They gave some guidance on the call.
They did. And overall, I'd say they're cautiously optimistic.
Cautiously optimistic, so like hopeful, but also realistic.
Exactly. They know there are some challenges ahead.
Right.
But they're also seeing some good momentum in certain parts of their business.
Okay, so let's break it down. Which segments are they most optimistic about?
Well, unsurprisingly, they're expecting mobile modular to continue to be the growth engine.
Okay, excellent.
They're seeing strong demand in both education and commercial rentals.
And those trends seem pretty sustainable?
Yeah, I think so, especially with the whole shift towards flexible workspaces and the ongoing need for school modernization.
Okay, so mobile modular, good.
Yeah.
What about portable storage?
Not so good, unfortunately. They're actually expecting a tough year ahead for that segment.
Like specifically, what are they saying?
Well, they're predicting that EBITDA for portable storage will be lower in 2025 than it was in 2024.
Okay, so they're not just saying it'll be flat, they're saying it'll actually decline.
Yeah, which makes sense given the headwinds they're facing with higher interest rates and the slowdown in construction.
Right, they're really getting hit from both sides.
Yeah, it's a tough spot to be in.
Okay, so mobile, modular, good. Portable storage, not so good.
Yeah.
What about TRS RentCorp, the high-tech testing equipment?
They're expecting that segment to stabilize.
Okay.
Basically, they're thinking EBITDA will be similar in 2025 to what it was in 2024.
So not great, but not terrible.
Right, kind of middle of the road.
Okay, so overall, a bit of a mixed bag.
Yeah, it is, but it's important to remember that these are just projections.
Right, things could always change.
Absolutely, and McGrath has a history of being pretty good at adapting to changing market conditions.
That's true. They've been around for a while and they've seen a lot.
Exactly, so I wouldn't count them out.
Okay, so we talked about the outlook for each segment, but what about the overall company?
Well, they gave some specific guidance on revenue and EBITDA for 2025.
Okay, let's hear it.
They're projecting total revenue to be between $920 million and $970 million.
Oh, okay.
And adjusted EBITDA to be between $345 million and $360 million.
Okay, so those are pretty wide ranges.
Yeah, they are, which again reflects the uncertainty in the current environment.
Right, it's hard to predict exactly what's going to happen.
Exactly. But even at the low end of those ranges, those are still pretty solid numbers.
Yeah, it just shows that they're expecting to continue to grow their business.
Right. And they're not just focused on top line growth.
Okay.
They're also making some strategic shifts in how they're managing their spending.
Oh, yeah. This is where it gets interesting.
It is. In 2025, they're planning to significantly reduce their capital expenditures.
CapEx, so like spending on new equipment.
Exactly.
Okay, and how much are they planning to cut?
Well, they're guiding for just $120 to $130 million in gross rental equipment expenditures.
Okay, and historically, how much have they been spending?
Significantly more than that.
So this is a pretty big change.
It is a major shift in their approach.
So why are they doing it?
Well, I think it's a combination of factors.
Okay.
On the one hand, they're obviously being more cautious in the face of economic uncertainty.
Makes sense. Why spend a lot of money on new equipment if you're not sure what the demand is going to be?
Exactly.
But it's not just about saving money, right?
Right. It's also about adapting to the current market conditions.
Okay, so how does reducing CapEx help them do that?
Well, instead of buying a lot of new equipment, they're going to focus on refurbishing and redeploying what they already have.
Okay.
So it's like they're giving their existing units a makeover instead of buying a whole new wardrobe.
I like that analogy.
Yeah, and this is especially relevant for mobile modular, where they have a large pool of existing units.
Right, they've been in that business for a long time.
Exactly. So they've got a lot of inventory that they can potentially spruce up and rent out at those higher new unit rates.
Okay, so it's a way to boost their margins without having to spend a ton of money on new equipment.
Exactly. It's a very clever strategy.
Yeah, I'm impressed.
Me too. It shows that they're really thinking creatively about how to navigate this challenging environment.
Right, so they're cutting CapEx, but they're also planning to increase their operating expenses.
That's right. They're expecting OPEX to be between $550 million and $570 million in 2025.
Okay, and what's driving that increase?
Well, a big part of it is the cost of refurbishing all those units.
Right, that makes sense. It's not free to give those units a makeover.
Exactly. In fact, they've said they expect to spend an extra $9 to $13 million on operating expenses this year.
Wow, that's not chump change.
No, it's a significant investment.
So the big question is it worth it?
That's the million-dollar question.
Will they be able to generate enough extra revenue from those refurbished units to offset the higher operating costs?
Well, that's what they're betting on.
And it seems like a reasonable bet given the pricing power we talked about earlier.
Right. If they can successfully redeploy those older units at those higher new unit rates, then it could be a very profitable move.
Okay, so it's a bit of a gamble.
It is, but it's a calculated gamble.
And it's one that I think could pay off big time if they execute it well.
I agree. It's definitely a situation worth watching.
All right, so we've talked about their financial outlook, their strategic shifts, but there's one more thing I want to touch on before we move on.
Okay, what's that?
Mergers and acquisitions.
Ah, yes, they've been pretty active on that front in the past.
They have, and remember, they received a pretty hefty termination fee last year when that planned merger with WillScot fell through.
Oh, yeah. That's right.
So they've got some cash on hand.
They do.
And they're definitely looking for opportunities.
They are. They've said as much on the call.
So the question is, what kind of companies are they looking to acquire?
Well, given their focus on expanding mobile modular, I'd expect them to be looking for companies that complement that strategy.
Okay, so maybe companies with a strong presence in specific regions where McGrath wants to grow?
Exactly. Or maybe companies with specialized expertise in certain types of modular construction.
So they're being very strategic with their shopping list.
Absolutely. They're not just going to buy any company that comes along.
Right. They're looking for companies that will truly add value to their business.
Exactly. And I think that's a smart approach.
All right, well, this has been a very insightful discussion.
I agree. I'm really starting to get a good feel for McGrath RentCorp and their strategy.
Me too, and I'm excited to see how they perform in 2025.
Me too. It's going to be an interesting year for them.
It is, with all the challenges and opportunities that lie ahead.
Absolutely. But I think they're well positioned to succeed.
I think so too. All right, well, let's take a quick break. And when we come back, we'll wrap up our deep dive into McGrath RentCorp with some final thoughts and predictions. All right, welcome back to Talk Tickers. We've been spending some time with McGrath RentCorp and their Q4 2024 report.
Yeah, a fascinating company for sure.
Definitely, and I think we've learned a lot about their business.
Absolutely. They're really a microcosm of the broader economy.
Yeah, you can see how all these different trends are playing out.
Exactly. And one of the most interesting trends we've been discussing is this idea of a circular economy.
Right, and how McGrath is kind of at the forefront of that with their shift towards refurbishing equipment.
Yeah, it's a really smart strategy.
So in this final part of our deep dive, I want to zoom out a bit and talk about the bigger picture.
Sounds good.
What are the key takeaways for investors who are considering McGrath RentCorp?
Well, first and foremost, I think they're a well-managed company.
Okay.
They have a long history of profitability, and they've consistently paid a dividend for decades.
Yeah, that's impressive.
It shows a commitment to returning value to shareholders.
Absolutely.
And they've also shown an ability to adapt to changing market conditions.
Right. They're not afraid to make tough decisions.
Exactly, like that shift from CapEx to OPEX.
Yeah, that was a bold move.
It was, but I think it's the right move for the long-term health of the business.
Okay, so Strong management track record of profitability. What else should investors keep in mind?
Well, I think their focus on the modular building market is also a big plus.
Okay.
That segment is growing rapidly.
Yeah, especially in education and data centers.
Exactly. And those trends seem likely to continue.
So they're well positioned to benefit from that growth.
They are, and they're not just relying on organic growth.
Right. They're also looking at acquisitions.
Yeah, they've got the cash, and they're actively searching for deals.
So that could be another driver of growth in the coming years.
Absolutely. And overall, I think McGrath RentCorp is a very compelling investment opportunity.
Okay. I like what I'm hearing.
Yeah, they're a company with a solid foundation, a clear vision for the future,
Yeah.
and a management team that's proven they can execute.
All right. So there you have it, folks.
Sure.
Our deep dive into McGrath RentCorp.
Hope you enjoyed it.
We've covered a lot of ground today.
We did.
But as always, we encourage you to do your own research.
Absolutely.
Talk to your financial advisor.
Yeah.
And make informed investment decisions.
Couldn't have said it better myself.
Okay. All right. Thanks for joining us on Talk Tickers. We'll see you next time.